Welcome to The Explainer from Talk Tickers. Today, we are diving deep into the Q3 earnings for A10 Networks. That's ticker ATEN.
All right, so let's get right into it. The headline number here is a 2-cent beat on non-GAAP EPS. On the surface, that looks like a pretty solid result, right? But the market kind of shrugged. So in this explainer, we're going to unpack exactly why that happened.
So here's how we're going to break it all down. First, we'll hit those headline numbers. Then, we'll dig into what's really driving things. After that, we'll get into the story that management is telling. We'll look at why the market's reaction was so quiet. And finally, we'll give you our take, the next call, on where this stock might be headed.
Okay, first things first, let's look at those headline results for Q3. And wow, you can see it right here. This was a really solid quarter. A10 didn't just meet expectations, they beat them by about 6% on revenue, bringing in $74.7 million. And on earnings, they delivered $0.23 per share non-GAAP, which is a full 2 cents ahead of what the street was looking for. I mean, that's what we call a clean beat on both the top and bottom lines. Okay, so a clean beat is great, but the real question is, what was behind it? Let's peel back the layers and see what drove that performance.
So the revenue mix here is actually pretty important. You've got product revenue, think their core hardware and software, making up the bigger piece of the pie at 58%. And then services, well, that's the other 42%.
But here's where it gets really interesting. Look at the growth here. Product revenue absolutely surged, up 17% year over year. That's blowing past the 6% growth we saw in services. And you know, management loves to see this because they see strong product sales as a leading indicator for what's coming down the pike. It's a super healthy sign for the business.
And that strength didn't just stop at the top line. No way. It flowed right down the P&L. We're talking really robust non-GAAP margins. I mean, operating margin expanded by over 200 basis points. That's huge. Plus, they're still taking care of shareholders. They bought back $11 million in stock and kept the dividend going. And the engine behind all this, just exceptional strength coming out of the Americas.
All right, so the numbers look good, but you and I both know that numbers are only half the story. The other half, the really crucial part, is the narrative. What's the story management is telling Wall Street? Because that's what's going to move the needle long term.
And the CEO, Drew Trivedi, he was crystal clear on the earnings call. He said, look, the AI build-out is a massive tailwind for us. It makes perfect sense, right? These new AI systems need exactly what A10 sells. High throughput, super low latency, and rock-solid security.
So this whole story they're telling, it really hangs on a few big lasting trends. First, obviously, is jumping on that AI wave. Second is their deepening focus on cybersecurity. And get this, security solutions are now more than 65% of their total revenue, which smashes their long-term target. And finally, they're pushing hard into the enterprise space. The CEO used a baseball analogy, saying they're only in the third or fourth inning here. That signals there's a lot of game left to play.
So, great quarter, compelling story, which brings us to the million-dollar question for this quarter.
So you have a solid beat on revenue, a beat on earnings, expanding margins, a confident AI story. Everything's looking up, right? So why did the stock basically go nowhere? It just kind of hovered in that $17, $18 range. Well, it looks like investors are weighing all this good news against one thing that was missing: specific hard numbers for Q4 guidance. Without that concrete outlook, the market's just sitting on its hands, kind of in a wait-and-see mode.
Okay, so let's tie this all together. It's time for the next call.
So, we have a solid quarter, but a pretty lukewarm reaction from the market. Where does ATN stock actually go from here? What's the play?
All right, here's our take. First, for Q4, we expect this momentum to keep rolling. Management's talking about roughly 10% growth for the full year, and that seems totally achievable. But the stock price? We think it's probably going to stay stuck in this range, that $17 to $18 zone, at least for the near term. The market is just hungry for more clarity, for a new catalyst. So, with all that in mind, our rating is market perform. The company is absolutely executing well, there's no doubt about it, but it feels like the current valuation already has that good news baked in.
So that's our take on A10's Q3. It's a solid company for sure, but investors are really going to be watching closely for whatever catalyst can unlock that next leg of growth. And as always, this is not financial advice.